Hello and welcome back to another video. My name's Sam and we are thrilled to have you join us today as we embark on an exciting exploration of the stock market. In this video, we will go back to basics and tackle topics such as what are stocks, what influences the stock market, how they're traded, and a lot more. Like always, feel free to share your opinion or ask questions in the comments down below. But most importantly, make sure that you stick until the end of the video so you don't miss out on anything important. Let's get started. So what exactly are stocks? Stocks represent ownership in a company. When you buy a stock, you're purchasing a small piece of that company. Companies issue stocks as a way to raise capital for different purposes like growth, research, or debt settlement. As a shareholder, you have the potential to profit from the company's success through stock price appreciation and dividends. But where can I buy or sell these stocks, you ask? Well, welcome to the stock market, folks. The stock market is like a giant marketplace where investors and traders come together to buy and sell stocks. It's where capital flows between investors and companies, shaping the financial landscape as we know it. Stocks are traded on stock exchanges, which are platforms where buyers and sellers come together to execute trades. These exchanges provide a centralized marketplace for trading stocks. But who keeps the stock market in check? Meet the Securities and Exchange Commission, or SEC for short. In the United States, the SEC is the top dog when it comes to overseeing securities markets, with its main mission being to enforce rules and regulations that uphold fairness and protect investors from potential fraud. The SEC isn't just a watchdog, it's a guardian, ensuring that the market operates transparently and investors can trust the system. However, one of the ways that the price is determined has to do with the basic principles of supply and demand. If the demand is high and/or the supply is low, then the price might increase. And if the demand is low and the supply is high, then the price might decrease. Just like the basics of supply and demand, there are a number of factors and players like market dynamics, economic conditions, and company performance that can also impact stock prices as well as the actions of market participants, including institutional investors, retail investors, and market makers. In addition to individual stocks, investors can also trade and track stock indexes. Prime examples are the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite, which are all indices listed in the US. We also have DAX Performance Index for Germany, Nikkei 225 for Japan, and FTSE 100 for the UK. These indexes represent baskets of stocks and serve as benchmarks for overall performance of the stock market. For example, the S&P 500 tracks the stock performance of 500 of the largest companies listed on stock exchanges in the United States. DAX performance consists of 40 major companies in Germany, and the same goes for Nikkei for Japan, and of course the FTSE 100 index for the UK. Understanding stock indexes can definitely help investors evaluate the health and direction of the market. But more on that in our upcoming index video. For now, let's go back to our main topic, stocks. Here are some of the most popular stocks that have captured the attention of investors worldwide. Companies like Apple, Amazon, Tesla, Alphabet, Microsoft, and Meta are among the top picks for many investors. These stocks are not only household names, but also represent companies at the forefront of innovation and growth. Whether it's Apple's revolutionary products, Amazon's dominance in e-commerce, or Alphabet's mastery of online presence, these companies continue to drive the stock market forward with their innovation and resilience. While their stock prices may fluctuate, their long-term potential and impact on the global economy make them popular choices for both seasoned investors and newcomers alike. However, instead of buying and holding on to shares when trading stocks, which is the traditional way, there's also an additional alternative, stock CFDs. With stock CFDs, you can speculate on the price movements of various stocks without having to purchase the actual shares. This trading method offers several advantages, including leverage, which allows traders to control larger positions with a smaller amount of capital, and the ability to trade a wide range of stocks from various global markets without the need for ownership. Okay, so let's summarize what we've learned today. Stocks represent ownership in a company and are traded on stock exchanges, which are platforms where buyers and sellers come together to execute trades. The Securities and Exchange Commission, SEC, oversees securities markets in the US, ensuring fairness and investor protection. Stock prices fluctuate based on supply and demand, among other factors, reflecting market sentiment. Investors track stock indexes like the S&P 500 and the Dow Jones to gauge overall market performance. Stock CFDs are a popular alternative to trading stocks, where one can speculate price movements without having to purchase the actual shares. And that should cover all the basic details about stocks. Let us know if you'd like to see a more advanced version of this topic in the comment section down below. We've also launched our brand new official FXGT.com blog site, which you can visit to read up on anything related to the markets in as much detail as you'd like. We have multiple different topics that are tailor-made for all kinds of traders and enthusiasts. You can visit fxgt.com/blog or simply click the link in the description. Don't forget to like the video and subscribe to our channel. And hey, since you made it this far, here are 2 more videos that you might like. I'll see you next time.